Hello, everyone. So today we are back for another weekly recap. So we are going to first start off with a hot topic that began, I want to say yesterday or so, and that is student loan repayment. So the White House did make an announcement earlier this week that they do plan to pursue anyone who is in default of their federally backed student loan. So what does this mean? You have until May 5th of 2025 to get your loans into compliance. And if you do not do that, they will begin debt collection efforts. So essentially, you should be contacting your student loan provider to either sign up for the income driven repayment plan or to begin making your monthly payments. So I would recommend for you to go on the website of your student loan provider or to give them a call to see if you can be eligible for the income based repayment plan. Now, depending upon your income or your family size, they will determine what your monthly rates will be. And in some situations, you could owe no money. So it will behoove you to give them that phone call or again, go to the website. Now, if you are going to call, I would say to brace yourself for long wait times. There are 9 million people who are impacted by what is going on right now. Based on the information that was released by the White House, there are currently 5 million people who are in default, and there are an additional 4 million who are on the verge of defaulting. And so this group of people are in jeopardy of having their wages garnished, their tax returns garnished, and any other income that they are going to receive will be garnished by the government if they do not get their student loans into compliance. Now, if you are already on a payment plan or you are currently paying your student loans, then you are fine. None of this applies to you. But if you are in that 9 million who's not paying or who is behind on payments, this definitely applies to you. Now, again, this does not apply to anyone who has a privately backed loan, like Sally Mae, for example. This is only if you have a federally backed loan. So this means you had a subsidized or unsubsidized loans in college. That's just who I'm talking to right now. So the deadline is coming fast and furiously. So definitely don't delay in taking those efforts. I know it can be uncomfortable making those phone calls. That's why I am recommending if you don't want to call and talk to someone, some of these loan providers do have chat services. So that could be an option. Or you can log into your account and register and sign up for the income based or income driven repayment plan. So that is just a public service announcement. The other hot topic this week is Chase and the infamous Chase glitch. So Chase is now pursuing anyone who stole $75,000 or less by participating in the Chase glitch. Now, in case you don't know what I'm talking about, back in August of 2024, leading into the Labor Day weekend, there was this glitch essentially happening at various Chase ATMs across the country, excuse me. And with this glitch, people were able to take checks and deposit them into an ATM machine, and the entire amount of the check, regardless of how much the check was, the entire amount would be available immediately. Now, if anyone who has banked at an ATM, you know that rarely ever happens. Usually, when you take your check and deposit it at an ATM, they usually will allow a portion of the check to be available and they release the remaining balance within a few days or more, depending upon the amount of the check. So, glitch became viral on social media essentially, and people were stealing thousands of dollars. When I tell you how much money people were stealing, it's insane. And what's even crazier is that there were no checks and balances to catch this until it was too late. So this began happening like the Friday before Labor Day weekend. So of course, going into a holiday weekend, Banks have minimal service on Saturdays. They are closed on Sundays, and then they were closed on Monday for the holiday. So, in the course of just a few short days, people were stealing hundreds and thousands of dollars. I was seeing situations where people were taking 30,000, 80,000. It was a lot of money that people were stealing, and what's even crazier is they thought they could get away with it. That's the part that's so mind-blowing. How do you think you can steal tens of thousands of dollars from the JP Morgan Chase and think there's no repercussions from it? I don't know. So what is going on right now? Well, let's backtrack. So what happens at the end of last year, so around Q4, they were heavily going after anyone who stole $75,000 or more. That was their main focus. And even saying that sounds crazy because how could someone steal more than $75,000 through an ATM glitch? That doesn't even sound right when I'm saying it, right? It sounds like, is that possible? Clearly, for this scenario, it was possible. There was an individual who stole over $300,000. I think he was based in Texas, and he was able. Well, the check that he deposited that was fraudulent was about 335,000, and of that, he was able to take, I think, 290,000. Oop. No one's talking to you, Siri. So anyway, so this is the gravity of the situation. And so they were heavily pursuing those individuals, not only in regards to getting their money back, but also in regards to filing criminal charges. And so that was Q4. So fast forward to present day, we're in Q2 of 2025, and they now have kind of pivoted and they're now focused on the individuals who stole below that $75,000 threshold. So they're filing lawsuits at the federal and state level, depending upon the amount of the money that was stolen. They're also, again, filing criminal charges at both the federal and state level. And most importantly, many of these people will be blacklisted from having a bank account. So banks have this thing called checks systems, excuse me, and they use this to kind of keep track of fraudulent behavior of individuals. So if you were to have an account at bank ABC and you did some fraudulent activity, that is being reported into this checks systems. So if you now try to open an account at bank XYZ, they're going to see that, hey, this person was doing some shady stuff at bank ABC. We are not giving them an account at bank XYZ. And this is what's going to happen to all of these individuals is that you now won't be able to have a bank account. And I know in this day and age that seems so minimal because we have other or alternative options like Cash App, PayPal, etc. But at some point, you do need to have a functional bank account. There will be situations where that is a necessity. And now at your big age, right, you won't be able to have one, which is crazy. So they're putting a lot of things in jeopardy. They're putting their freedom at risk. They're putting their livelihoods at risk. I don't think it was really worth it. And then to make matters worse, they were implicating other people. So, for example, I mean, I say if someone had stole, let's say, 50,000 from Chase, they couldn't take all of the money through the ATM. So what they would do, they would send money to other people. They would use, Cash App, Apple Pay, Venmo, all of these third-party payment providers to send money to either themselves or to other people. So now you're involving innocent people in your fraudulent activity. Crazy. And what's also crazy about this whole Chase Glitch situation is some of the individuals who were participating, they were doing this activity on accounts where there were other joint account holders. So I saw a couple of stories where teenagers or young adults were participating in this glitch, but the account in which they deposited the fake check was an account where their parent or their grandparent was a joint account holder. So what was happening with that is now, let's say if son and mom have an account with Chase and the account is now negative, let's say 20,000, but mom has a separate account, checking, savings, and let's say she has, I don't know, 25,000. Chase was pulling the money from the mom's account, the fraudulent activity that happened on the joint account that mom had with her son. And now this account where her name is on is now flagged as fraudulent. And so I'm not sure what's happening with that. Is she now part of this blacklist in the check system? Or will she be excluded because she technically is a victim of fraud as well? So I don't know the nuances behind that, but this is just an example of where people who are participating in this glitch, they're now involving innocent people who now may have their livelihoods at jeopardy. So definitely a bad situation all around. And again, Chase wants their money and they are not playing games. So that's the latest and greatest on that. I think we will be hearing a lot more about this. I know we are about, I don't know, 9 months past when this all occurred, but I think this will be coming up constantly until Chase really comes to a full resolution of what actually happened. So more news to come on that. Next big news this week is Capital One did receive the final approvals to acquire Discover. So that, of course, was kind of just in the makings, in the works. They were waiting patiently for all of the regulatory approvals to come through, which they did receive this week. So this now puts the sale to be on track to close on May 18th of this year. So what does that mean for you if you are a Capital One customer or Discover customer, or if you own any of their stocks? So let's kind of walk through the different categories of people that will be impacted by this. So if you are a Capital One account holder, whether it is a checking account or a credit card, as of right now, there won't be any immediate changes, but in the near future, the game plan is to transition all of Capital One and credit cards to the Discover network. So for the most part, all Capital One credit cards are either a Visa or a MasterCard. So that is going to change over time eventually. So in the first, I guess, let me take off this Apple Watch. I keep knocking the button and it keeps talking back to me. Anywho, so with Capital One, they are in their first, I guess, phase or round of changes. They're going to focus on transitioning debit cards. So all debit cards will eventually be transitioned to a Discover card. And then regards to the credit cards, that transition will be a bit slower. It all will be dependent upon the contracts that are in place with both Visa and MasterCard and the co-brand partner, if applicable. So I think that will be a much further down the line timeline, but it is on their roadmap. Just know if you do have any of Discover's, excuse me, any of Capital One's credit cards, your cards will transition to Discover. Now, I did post a video about this topic on both Instagram and TikTok and Facebook as well. And on TikTok specifically, people were upset about that change. I think for a lot of them, their fear is now this card that they've had for a while now, it's pretty much widely accepted because Visa and MasterCard are taken pretty much everywhere. So to go from that to now you have a card where your card may or may not be accepted everywhere you shop. Now, I think this is more so applicable if you are traveling abroad. I think here in the States, Discover does have more of a footprint than it did once upon a time. But when you go abroad, I have definitely found that Discover is the least accepted card. Then you kind of have American Express, then you have Visa and MasterCard, of course. Um, Everyone takes them essentially, right? So many people are really unhappy from what I saw in that TikTok video. So some are considering of closing their accounts. I think that's a bit extreme. Since it's not happening in the near future, why would you close your card? I don't know. I understand the frustration, but kind of just see how this plays out. You might be pleasantly surprised. I don't think we should jump out the window and make these drastic decisions, but some people are really saying, I'm closing my card. I don't want a card that I can't use, which is a bit of excessive to say. I get the point. It's less accepted, but you can still use it in many places. So TBD. Let me know in the comments if you're watching the replay how you feel about it. If you have Capital One, are you happy about this transition? Are you concerned? Or are you kind of neutral and just maybe waiting it out to see how it all plays out? So, with that being said, the market, of course, responded positively to this news. The Discover stock is up this week. It's up to $185 per share. Capital One is also up this week. It's at $183 per share. It's up 12% this week. So the market definitely was responding pretty well. Plus, both companies did have their earnings calls earlier this week, too. We'll kind of talk about that briefly in a moment. So it's definitely a lot of positive things going on with this Capital One acquisition of Discover. Now, we talked about Capital One customers. Let's now pivot to Discover customers. So if you have a Discover checking account or credit card, there are no changes on the horizon for you just yet. You already are on the Discover network, right? So there won't be any changes there. You may see some changes to the rewards offered by your credit card and by your checking account. That is a possibility, but we don't know what those changes are going to be just yet. Just know in the back of your mind, it's a possibility. So things are kind of okay for you in the near future. Now, if you let's talk about if you have any shares in any of these companies. So for Capital One customers, with this acquisition, there's no changes for you. You will have your stocks in your portfolio as is. Things will be business as usual. But if you own any Discover stock, what's going to happen is when the sale is finalized, your shares will be converted from Discover stock to Capital One stock. But it's not a one for one buyout. You're actually going to one share and then a very small fractional share. To be exact, you're getting 1.0192 shares of Capital One. Now, you don't have to do anything per se for when this happens. It will happen behind the scenes in your brokerage account. So it will just be one day you will see Discover stock in your portfolio. The next day, when everything is processed, you will then see Capital One shares in your portfolio. That's pretty much it. So again, nothing for you to do, just more of an FYI, and just keep your eye on your portfolio. Next thing on this week's weekly recap, Walgreens made an announcement. I think they made the announcement last month, but it's now kind of resurfacing. So they are going private in Q4 of this year. They will be bought by a private equity firm. And so this is definitely not surprising. Walgreens has been struggling for quite some time. The biggest issue with Walgreens is they haven't found a great way to diversify their revenue streams. And so the pharmacy industry as a whole is struggling. And so they're just feeling more of it because of their lack of additional revenue streams. So, for example, Rite Aid, right, they had to file for bankruptcy. They have also now gone private. This happens in 2024. CVS, they are also they've seen the downturn in the revenue on the pharmacy side of the house. But what is their saving grace is they have found ways to diversify their revenue streams. So their biggest stream right now that's keeping them afloat is their health services sector. So you think about their minute clinics at their pharmacies. They also did acquire Aetna a few years ago. And of course, Aetna is a huge healthcare provider. And that acquisition has been great for them thus far. They've integrated the company really well. And so that is what's keeping them afloat. So much so, their stock price hasn't really taken a hit when you look at it year over year. It's pretty much on par. I want to say it's currently at $66 per share. Let's take a quick peek to make sure I'm not misspeaking. That was the stock price the last time I looked at it. Oh boy. Oh, here it is. Let's take a quick peek. CVS. So yeah, they closed at $65.32 per share. And when I look at their year over year, they're down 3%. So nothing crazy where other companies have seen a drastic hit. Now, with the pharmacy industry specifically, what's going on there is they are seeing lower reimbursement rates from insurance companies. They're seeing stiffer competition from companies like Amazon, who recently went into the pharmacy space, and also your big box retailers like your Targets, Walmarts, etc. So they are really causing a lot of price pressure in the market. And of course, on the opposite side of that are these legacy pharmacy retailers who are feeling the pressure, right? So it's going to be ongoing until they are able to figure out how to pivot and how to compete. And to kind of take it one step further, not just the pharmacy industry, just the retail industry as a whole, the companies who are not able to find that competitive edge, they are going to continue to suffer during this recession. And some may even have to file for bankruptcy or go out of business altogether. So we are going to see more companies. Think of Party City, think of Joann's, think of Big Lots, right? A lot of companies have either filed for bankruptcy or closed their doors altogether. And again, it's going to be more common than not if these companies don't find a competitive edge. And in some cases, it might need to be an acquisition, a merger, a targeted partnership, right? Sometimes it's united we stand, divided we fall. Some people might have to kind of band together to fight through this recession, but that's just my personal opinion. So next we'll jump into earnings calls from this week. There were some pretty important ones. The one that I want to talk about first is Tesla. So as we know, Tesla has had a really rough time not just coming into the new year, they've been struggling for a while, for the last year or so. But once Elon Musk was really entrenched in White House activities, that's when things really took a turn for the worse. It's down like 30% year to date. There's been like people damaging various Tesla vehicles and dealerships. It's been kind of wild to see. I understand that you may not like what he's doing in the White House, but to then damage random people's cars just because just seems very barbaric. I get the protesting piece, but to damage someone's property because of someone else, right? Because of the CEO, that just seems kind of weird, but it's been happening. So with their latest earnings call, they did miss their Q1 revenue target by $2 billion. And I think they're in the place now of damage control. It's gotten so bad where many of their major stockholders have been asking Elon Musk to step down because the bad PR is really not impacting the company financially, and no investor wants that. When it's something that you have control over, fix it and fix it fast, right? There are things that happen that is out of a company's control, so you will have situations where there's this bad PR or the economy is bad, or right, things are happening across the board. But with Tesla specifically, you have the CEO that is damaging the brand's reputation and damaging the company's financials. And as you know, with corporate, cash is king, right? What can you do to make me money? That's all investors care about. And if you are impacting my ability to make money, we have to fix it and nick it in the butt. And so they were asking him to step down, and he kind of was holding on to his stance of, no, I'm not stepping down, and I am still going to be in the White House and doing my duty there. He was holding on to that for quite some time, but now we are seeing how bad things are becoming. So now he's kind of pivoted and shifted his stance on this. So he has now agreed to step away from his duties at the White House, from being full time. Now he's saying part time. He will only work there 1 to 2 days a week. but I don't know if that's going to be sufficient. I think he needs to either be all the way in or all the way out. You can't be half pregnant. You know what I mean? So decisions will have to be made. So only time will tell how that's going to play out. Next up, Capital One did have their earnings call this week, as I mentioned. It was on April 22nd. So great results overall. Revenue is up 14% year over year. Net income is up 10% year over year. And the stock is up, I think I said 12% this week. And a lot of that was due to, right, 12% this week. A lot of that was due to the positive reports from the earnings call, but also it coincided with the approval that they received to acquire Discover. So all in all, great Q1 so far. Discover also had their earnings call. They had it yesterday, not yesterday, 2 days ago, April 23rd. And so they too also had a great quarterly result. Excuse me, revenue was up 39% year over year, and net income was up 30%. Now, they are still going to pay dividends. So they are paying out dividends on May 23rd. They are paying out 70 cents per share. And this also contributed to the positive stock increase this week. So definitely a win-win for Discover. Other big earnings call that happened this week was Southwest. So Southwest, they have been struggling for quite a long time. So they are now on this transformational path, which they talked about during their earnings call. So, of course, their biggest concern right now is increasing revenue and increasing profits. So, revenue is up 2% from year over year. Net income is up 35%, but the net income was negative about $100 million. So they're less negative than they were a year ago, but they're still negative. They're not profitable, and no company can sustain that long term. So if you are a Southwest customer, this is the number one reason why you are seeing so many major changes with the airline. And I know most customers are not happy with the changes, but they can't sustain the business plan as they have been operating the last 30 plus years or so. They have to make these changes to remain competitive and, more importantly, to stay in business. So, with these new plans, of course, the biggest one is they will start charging check bag fees. So that's going in place on May 28th of 2025. Now, they haven't announced how much they will be charging for these check bags, but it will be implemented for any flights booked on or after May 28th. Now, in order to avoid paying a check bag, there are some things you can do. You can either book a business select ticket. With that, you will receive 2 free check bags. You can also sign up for one of their credit cards, and those are all through Chase Bank. If you do become a credit card holder, you will be allowed to have 1 free check bag. Now, if you do achieve status, they have A-list and A-list preferred. That's the other workaround to avoid paying check bags. So if you don't fall into any of those categories, you will have to pay for your check bags. Bags fly free are no longer or will no longer pay. They also are going to start offering red eye flights. Now, this was news to me. Now, I don't fly Southwest. I thought all airlines offered red eye flights, but apparently Southwest did not and has not during their entire time of being in business. But they will begin offering red eye flights. And again, that's to be competitive. There are many people who take these red eye flights mostly for work or just to make your travel plans more convenient. And those flights are lucrative. And so they are now going to compete in that space by offering them. And so essentially, they are moving to a fully functional 24-hour operation, which I thought all airlines did, but apparently Southwest was not. So this is part of their transformational plan to, again, work on increasing revenue. They also will be offering more legroom seats. So currently, Southwest just has standard seats in the entire plane. There's no like real upgrades, but they will be changing that. They are going to retrofit many of their planes to now offer these even more. Well, that's JetBlue, but the seats will have more legroom. So that is going to be another way for them to generate revenue. Now, their other plan is, oh, let me take a step back. So these more legroom seats will be offered starting May 1st of this year. So something to keep an eye out for if you do travel with Southwest. So the next thing they will be implementing assigned seating. So currently Southwest has like an open seating arrangement. If you're not familiar, when you book your ticket with Southwest, you don't pick a seat. You just buy your ticket, and then about 24 hours prior to your flight's departure, you will be assigned a boarding group. So how that works is they have three boarding groups: Group A, Group B, and Group C. So Group A, they board in order. So Group A boards first, so on and so forth. Now, the idea behind that, if you are in Group A, you have a better chance of picking the seat you want, and you have a better chance of having space in the overhead bin to put your luggage. So it's a premium boarding group. So in order to be in that group, though, there are things you have to do to get there. You either must purchase a business select seat, or you must have status, or you must pay for it. That's kind of how it works presently. So they're moving away from this open boarding seating arrangement to now moving to assigned seats. So my assumption is they are now going to charge you to pick your seat. I know with most airlines, unless you fly first class, you have to pay an upcharge to pick a window seat or to pick a seat closer to the front of the plane. So I think something very similar. They haven't discussed rates or the logic behind any of that just yet, but the assumption is there's going to be a charge for that. So all of these things that I just listed, they are Southwest's attempt to increase revenue so they can come out of the negative. So we'll see how it goes. I think that many customers are not happy with the changes. Some are, though. I think some people are happy about the red-eye flights. They're also offering new routes, but in turn, they're discontinuing unprofitable routes as well. So there will be a mixed bag of people that will be happy with the changes and others who just won't be happy. I think the free check bag is the biggest bone of contention that people are having with this whole Southwest transformation, because that's always been their selling point, right? The bags fly free. Your first and second bag fly free. It's been their catchphrase for so long. And for many people, it's the only reason why people were flying with Southwest in the first place. So now you've taken that away. Is there a reason for brand loyalty now when there are other options? And essentially, you are becoming like the legacy carriers now. So only time will tell how this plays out, but I get it from a business perspective. You remove the emotional part of it, it's all about money. It's about profits. If you're not profitable, you can't stay in business. That's just the way things go. So they have to kind of fight to be competitive, and this is some of the things that they are trying. And it's like anything else in business, you only can know what works until you try it. And I'm sure there will be things that are going to go well, things that won't go well, and they'll have to adjust and pivot along the way. And that's just the nature of business. But it is good to see that they are fighting right for their spot. And who knows, it may actually work in their favor. So that is it for today, this week's weekly recap. I hope you found this information helpful and useful. If you do have any questions, feel free to leave them in the comment section down below. And I will see all of you guys next week. Take care.